Hey everyone, I'm Tony with Clarkson Santoro, and this is our weekly real estate update for August 19th. In this weekly series, we update you on the latest trends that are occurring in our real estate market here in San Ramon. Using our more than 50 combined years of experience helping clients buy and sell homes, we explain what those trends mean for you as a homeowner or someone who is looking for a house that you will love to call home. The current inventory is 80 homes, down from 95 last week. The average asking price of those homes was up to $2,038,000, which is higher than last week's average of $2,027,000. 20 homes asking an average of $1,901,000 went pending this week. That is more pending homes than last week's number of 18, with a lower average asking price from last week's $1,909,000. A total of 7 homes sold this week, with an average sales price of $1,665,000. That average price was down from last week's average of $1,705,000. And the total number of homes sold was lower than last week's 13. Okay, so now that we know how our market performed this past week, let's look at the key metrics we track that help us understand where the San Ramon real estate market might be heading. The first metric we watch is our inventory of active single-family homes for sale. Inventory has dropped again for the 4th week in a row. We are rapidly approaching that sweet spot of 50 active homes that we think constitutes a normal, neutral San Ramon market. The total number of coming soon homes remains low as well, so we don't expect to see the inventory levels increase anytime soon. This indicator score came up to 28 last week, and we will raise the number again to 35 as we move closer to a normal inventory level. The next indicator we track flows directly from inventory levels, and that is the market turnover rate. There was a pretty significant change in the market turnover this week as the number jumped nearly 40%. Last week, we were still leaning heavily towards a buyer's metric at 0.60. This week, the turnover rate jumped to 0.84, which is still leaning towards a buyer's market, but is now much closer to a neutral market. Last week, we raised the score to 30, and we are raising it again to 43 this week. The over-under asking price is the next indicator that we track. The difference between list price and closing sales price dropped again this week. We are still within a very normal plus or minus 2% of the asking price that we have historically seen in normal markets, but the average sales price has been slightly below the asking price for over a month. That number is likely going to continue to drop as it tends to lag by 30 days compared to the rest of the market metrics because of the standard 30-day escrow. Last week we gave this indicator a score of 47, and this week we are lowering it a bit, just a little bit, to 46. If we remain within the plus or minus 2% range, we are very close to a neutral market. The last trend we watch closely to gauge the strength of the market is the average sales price of single-family homes. The sales price of homes has actually increased slightly this past month and is now about $50,000 higher than the lowest point we saw in July. This is a tricky statistic though because it makes it seem like the market has bounced back more than it really has. The main reason we have seen such a significant jump in closing price already is that we went through a phase where only lower priced homes were selling. Now that the market is showing signs of renewed upward trend, higher priced homes are starting to sell as well, which drives up the average price. Last week we gave this indicator a score of 65, and this week we are raising it a little bit to 66. The first 2 metrics we pay attention to that help us predict where the market is heading is the strength of the Silicon Valley tech industry. The sharp decline in the price of triple Q shares starting in late March of this year really was one of the catalysts to the sudden slowdown in the San Ramon market. The price per share has started a slow but steady recovery since mid-June, and we are starting to see more buyers return from the Silicon area. Since most home buyers start their searches online now, we are able to track where most web traffic is coming from when visiting our listings online. This past week is the first time since June that the South Bay cities are landing in the top 10 cities that buyers are searching from for our listings. Last week, we gave this indicator a score of 46, and this week we are leaving it the same. Finally, we track the average mortgage interest rates. Interest rates dropped a little this week again, and it has now been about 3 months since the interest rates have been hovering around at or above the 5% watermark. It seems that buyers are either becoming more adjusted to the reality that the interest rates are going to be at that range as low and not as low as they were in 2021, and they are returning to their previously abandoned home searches. Either that or sellers have made the appropriate adjustments in price to entice buyers in spite of the higher interest rates. Either way, with the increased market turnover, it appears that the interest rates are no longer the major barrier to entry that they were just 4 months ago. Last week, we gave this indicator a score of 38, and this week we are raising it by 1 point to 39. Overall, the market seems to have stopped what felt like a sudden over-adjustment and is starting to level off. For sellers, we think that the priority remains to improve and stage your house so that it impresses buyers when they walk in. That is the best way, other than setting a really good price, to get your house sold in this market. For buyers, it looks like it's going to become more important that you move quickly when you find the house that you want to call home. You won't have to throw all your money at a house as soon as you see it online, which is what it felt like over the past couple of years. But with inventory continuing to drop, it's less likely that you'll have the pick of the litter, and even less likely that you will be able to sit and wait for that house that you like to reduce price in 2 weeks before you make an offer on it. Last week, we scored the market at 42, and this week we are raising it again to 45. It is almost completely neutral at this point, but leans just slightly to a buyer's favor still. I hope this weekly summary and commentary helped you understand our market better and how it is affecting you. Let me know in the comments down below, or contact us directly if you have specific questions about how you can navigate this market to sell or buy a home. And if you find this information helpful, share it with a friend, hit the like button and subscribe so that you'll always be up to date on the latest real estate news here in San Ramon. Have a safe weekend, and we'll see you next week with a new update.